Hello, West Pacific Market Analytics, and it's Glenn here with a West Pacific Week update. Let's not waste a lot of time. Let's not get into a lot of gibberish. Let's just jump right into it. Hope everything's going great for you. Let's not focus in on all the issues in the world. It just seems like social media these days just floods us with so much information that is really a lot of a waste of our time. It's just incredible the garbage that's out there these days. It's interesting, it's entertaining, but boy, there's more to life than just sitting there glued to social media. So let's get into it. I just want to show you some thoughts of what I'm seeing here, and I think it's important. What we're going to be looking at is pretty limited, but I think it's important, and I want to see how this resolves itself here in the next few weeks. So again, the disclaimer, these charts are for educational entertainment purposes only, so please read it, and then let's jump into it. All right, let's start off. Actually, let's start off right here because I found this kind of interesting. I was seeing that unrealized losses on investment security for U.S. banks reached 337 billion in the third quarter of 2025. That's the 14th consecutive quarter of losses, and they say that it's matching the 2006 to 2009 streak. Furthermore, this figure is 6 times higher than the peak seen in 2008. So you can see right here this unrealized losses, which is here. Again, this could simply be moving up because they're starting to realize a few of those losses. But there is just a massive amount of unrealized losses at investment security firms and banks that are just not being written to book. And I don't think that's just in securities. I mean, if you look what's going on in the commercial real estate market, I follow an individual that's an expert at it over on Twitter, and he really knows his stuff. And across the United States, it is an absolute disaster in the kind of losses we're seeing in the commercial real estate market. And that's even starting to trickle in over into the hotel sector. And soon, I mean, you've got to consider some of these massive loans that have gone out in housing for absolutely overpriced homes in that area as well. It can get pretty ugly ahead when there's just going to be losses mounting up. It is not a pretty situation. So I kind of wanted to start off with that. It's amazing we're sitting at all-time highs when we look at some of these news. But remember, it's not the news that drives the markets. It is purely the momentum and the velocity of said momentum that controls price. And we have been in a momentum upward market since the lows in 1943. And actually, we had this signal, which is the first time it's turned since the lows in 1932. We've never seen this signal turn down, and the last time it turned up was at the 1932 low. Now, we chopped around from 1932 to 1943, so I somewhat consider the start of the bull market 1943. So think about it. We have literally been in a bull market since that time. And even 2000 and 2007, they were not bear markets. They were just corrective moves in a bull market. The only time we had a true bear market was from 1929 to 1932. And my feeling is that this high that we are encountering could represent the beginning of a 4 to 6 year bear market. Now, I've been early in making that call, and that's been my mistake, but part of it has also been in understanding the data. So if we take a look at that, my feeling is if we've got what I call the J top, now I've kind of blocked out the rest of this model because there's a pattern in play here that I don't want to disclose just yet because it's not important to the ongoing situation of seeing what goes on next. But according to the pattern, if we do get some sort of corrective move here, I'm expecting a downward move here in 2026. We'll see how low it can get. My expectations are an ABC down to this first low, which should take us down potentially to the 2022 lows, and then a rally back up out into 2027 to form this massive head and shoulders topping formation. Right here being the head, we're probably going to get a minor shoulder over here to mirror this, right? So we'll get a shoulder, and that will form a head and a shoulder, and then we might get a much bigger shoulder and shoulder formation. We'll have to see how that plays out off of this shoulder forming a shoulder over here. So it'll probably be like an A, B, C kind of move for an A, then a little rally up, and then back down into the final low, and then we'll have a big rally back up, and then we'll talk about that later. So for 2026, I'm looking at a corrective type move, and then it should be ending in 2026. We'll see how fast this thing wants to run once we get out the top here, and then a rally back up. So that, that's going to take the next year to 2 years just to get this massive head and shoulders formation completed. So it's a long road ahead, and really that's all we're going to be worried about in the near term. There's no need to talk further out about that. Now today, I just wanted to get into, there's so much else we could talk about here, and I really don't want to get into that. What I want to do is get into the 3 keys models. So let's take a look. Now what the 3 keys consist of are what I consider to be the 3 most important technical internals within the market. And that's been over my 40 years of working in this markets and the last 10 years of pretty intensive research around the West Pacific Stream project that has come to show me that these 3 internals are very key to everything. And what's interesting is this is key number 1, which I put out in front because it's the last one to see this idea of topping momentum. So what I've come to find is this idea of the directional circulation indicator, which is made up of this blue line. You notice how it's finally topping out and then going to curve over here if we extend it out. Excuse me, with its top being somewhere here around the end of 2026. So that doesn't mean we have to completely top for this to start down. I mean, we could see very much a corrective move because this has to price back here within the V channel. You notice over here into what I call the rising V. Look how long this took to top out here on the other part of the channel, which is this pink line. It's made up of this blue line, which is called the direction of the circulation of the dock, and then this pink line, which is considered the momentum of the circulation. And it is kind of acts as a channel. So you see in this channel, the red, which we're modeling here, is priced very nicely in the channel. And then you notice as this rolled over and this topped out, we've then been chopping sideways here. So we've pretty much been chopping sideways on this red indicator since about the end or the middle part of 2019, right? So look, we're pricing right here 2019, 2021, right here in the V channel. And then we're working over as the V channel begins to change. So the V channel from being above to now being below, right? And of course, the topping momentum hasn't topped, which also acts as a time indicator. This could have simply priced, you notice, right back up here. And then we got this minor pop out here. So this minor pop out could be due to other things as well, other technicals within patterns within the market, Elliott wave type extension, a lot of things. But all we care is that watch to see when this signal rolls over. So you notice when we had a signal roll over here, that was the top of 2022. It came early. But this should be, as soon as it turns, it should be down because you notice the red signal worked its way down, and once it arrived at price followed it down. And then it hit the low and the market hit the low. And you can see the same thing happened here in that 2020 corrective move, right? But I mean, the 2020 corrective move, price was down here and we needed to be up here. Now we're both priced up here and this all needs to be down here. So we're going to be watching these signals, right? We need them to top out. And here's key 1 here. Again, this is more the weekly signal. We're going to need to see it top out. And then we'll talk about what all this means. Now you notice like here, when the trend went negative here, you see that when it goes negative, then we can break below this moving average blue line here, right? So then you notice how it's all pricing below the blue line. So we got to see some things happen, and we'll get into that more as it continues to extend itself out. Now, if we look at the velocity model right here, it kind of mirrors what we just looked at in that gatekeeper model. And you notice back here in 2018, 2019, we're working up into V. We've got loads of velocity. We've got loads of trend. It's all working up into it, right? So you notice here we're at the bottom of the momentum of circulation. Here's your V channel, right? So look, 2019, and then it rallies back up into it. 2020 gets down to the bottom, rallies back up into it, shoots over, prices right to the top of the velocity, and the velocity model comes right down the velocity. The signal continues to move down. Again, the other indicators complain of price rising here, but then we notice this finally then rose up at trend. So we went from working up into V to at velocity to now at trend. and we've broken a little bit above. So this is indicative. I mean, we've been like what, 5 weeks ago. We even got a gravestone doji there 4 months ago. This is a monthly model, and we've now had basically for 5 months this market going nowhere. This is not something you want to think this market is going to go lower. Going to go higher. According to those models, that's just not going to happen. So when we go into the second key, we can see a similar idea here, right? We can see this same idea, but notice back here, momentum top back here, and then notice we priced right to the edge of the V channel, and then we broke out. So again, we're going to want to see this signal to roll down. You notice rolling down here, same idea. Price very nicely in the velocity channel, which is now working its way lower, going out into our projected 4 to 6 year time period. Right? So this is all now going to want to work its way down here. Now it's not just going to drop down. We're going to see these drops and back up, drops and back up. It's going to work lower. There's nothing suggestive in these models for any higher price. This is it. This is it. You should be cashing out if you've got a portfolio and expecting lower prices into the next 3 or 4 years. You just cannot keep rising forever. Everybody thinks in this Ponzi fiat economy that we can just go up forever. But, that didn't happen in 2000, and that didn't happen in 2007. You can't continue to expect them to print money like there's no tomorrow. And really, it's not going to matter because it's all priced into these velocity models. Now, you can see in that key 2, the same idea here. Price very low down here, rising up, finally arriving in the velocity channel. Now notice it still was priced below the velocity channel in our key internal 2 at the 2020 lows. It had to price up here, and we were only just topping here on the momentum. Now notice the momentum again on this one too, working its way lower, and then you see how we came up here and then trend bucked around into our corrective move we had in early 2025. And again, it wanted to push up one more time. This kind of felt like it to me, but it didn't. It wanted to push up again. And again, there could be Elliott wave factors. There could be other factors that wanted it to push up here. If we look at other models, besides these 3 internals, that can be a case. Because remember, the American markets are trading lock sync with other markets like Japan and Europe as well. And they've been strong. So we gotta take that into factor. But the U.S. is topped out by the looks of these 2 models, and these are 2 very key models. And then you notice here, pretty much from 2024, 2025, and 2024 and 2025, you see how the trend was just trading sideways here. Now again, this idea of as the velocity drains, at some point it's going to start to suck this trend down more aggressively. So we're going to watch now for this trend to really start to break lower this year. And then that's going to pull the price off the top. And we see that pretty much in all 3 of the models. Here's the third key. Again, every one of these is, you notice here, the difference though, here notice on this last model, let's go back, you notice how it had a 1 top, a 2 top, and a 3 top. And then you notice on this, we only had 1 top and now 2 tops. So we didn't have a top here on this 2019-2020 move. It didn't top until the 2022 move. But again, notice it pricing in the V channel on that 2025 corrective move. It looked like it wanted to held, but for some reason there was one more pop out there. And again, this wants to come down here. So we're seeing this on all 3 of these internal models. This idea of how the market wants to correct itself lower. So we got to be aware of that. We want to be wary. We want to let these markets top out here on the signal, want to see these signals roll over, and then we'll have a better idea of what lies ahead. So I really want to focus on the 3 keys. And we're going to be looking at that more going ahead. There's just so much more I want to share with you. Bitcoin is going to go lower. I don't see any rally here if you want to talk about crypto. And I don't want to get into it, but crypto is going to have a lot of problems further ahead. If you're in crypto here, I would be very, very careful. It's too bad that you didn't cash out. If you didn't at 129, that was, I hate to think, the kind of money that was taken off the table up there on those that really know the truth about it. Crypto's not going to go back above 129,000 again. That's its final high. That's all I want to say about it. And I don't want to get into it too much because we're not here to talk about Bitcoin nor crypto, and a lot of people don't even want to hear about it because a lot of people understand really that there is no value there, because there's not. And if you look at a lot of the alternative coins, it's an absolute mess. So have yourself a great week ahead. I'll be back at you with some other data, and thanks for tuning in. Glenn out.